Hi everyone. So he's led companies through the fire, potash, gold, copper, and now the mineral that's got Washington and Canberra in a rare earths race. Brett Hazelden, the managing director of OD6 Metals, oversees one of Australia's highest grade clay-hosted rare earths projects, 682 million tonnes at Splinter Rock. And with Trump and Albanese just signing an $8.5 billion rare earths deal last week, the timing couldn't be hotter. Brett's now been in talks with US agencies and major producers globally, positioning OD6 right where the action is. And welcome, Brett. How are you?
Thanks for having us. I'm well, thanks.
Thank you. Are you ready?
Let's go for it.
Wonderful. Well, look, so for people who are actually new to OD6 Metals, can you please give us a quick overview of the company and what makes your story so compelling and stands out in the critical minerals space?
Yep. So OD6 was listed just over 3 years ago on the back of a rare earth project in Esperance in Western Australia. So we've spent the last 3 years obviously continuing to work that up through the phases of both test work and discovery, etc. And then recently we just added in a project in New South Wales, which is a copper project. So early stage copper, but it's a historic copper mine from over 100 years ago. So best place to find a copper mine is right next to or underneath an old one.
Fantastic. Now, look, you've got two key projects, Splinter Rock for rare earths and Gulf Creek for copper. I mean, how do these actually fit together in your broader growth strategy?
Yeah, so we've sort of based it on making sure we've got access to two different projects, two different commodities, so differences in cycles as well. So you've seen over the years rare earths go up and down, and obviously copper's going straight through the roof at the moment at over $10,000 a tonne as well. So for us, it's nice having both of them there. Gulf Creek copper is a little bit earlier stage, but Splinter Rock's obviously getting through the study phase as we speak.
Sure. Look, I know you're not supposed to choose between two children, but if you had to perhaps put like your focus on at the moment, which project would be a priority?
So the main project's always been Splinter Rock, being the rare earth project, something that we started off with. The copper project was obviously a nice little add-on at the right time. So definitely Splinter Rock is the flagship for us.
Fantastic. Now, look, going into Splinter Rock, it's clearly shaping up to be a globally significant rare earth project. Can you talk us through, comprehensively, like what's been achieved so far, and what makes this project so exciting? Because the truth is, Brett, rare earths has been two words that I have heard quite a lot right now in the mining circle. So, what makes you special?
Look, I mean, rare earths in general is controlled by China, so there's only two producers really outside of that, which is Lynas in Australia and MP Materials out of the US. So
Mhm.
lots of work going into those guys over the last 20 years. For us, the demand and basic fundamentals are you need a whole heap of rare earths for Warcraft, obviously, is where the US is coming from, but you also need it for electric vehicles, air conditioners, wind turbines, etc. So from our point of view, we've got, as you mentioned earlier, 682 million tonnes of a clay-hosted rare earth resource at
Mhm.
over 1,300 parts per million trio. So that's really good. There's a couple of higher around in Brazil, but we're obviously not in Brazil, but we also get higher recoveries. So that's the sort of starting point for Splinter Rock. It's a good place to be in. There's lots of demand fundamentals there, and we've got a good resource. And that resource is probably only about 10% of our total area, so there's plenty of upside there as well.
And look, I obviously we spoke very briefly off camera that you are in discussions with a lot of producers. You mentioned some pretty big names there. Are those names also some of the discussions you're having with as well?
Yeah, there definitely are some of those names that we're discussing with, and we're also discussing with European. So there's Caristar and Solvay and a whole heap of others around the place that we'll continue to have discussions with. The question is who's the right person going forward, both from a financing perspective. So will it be private financing or government financing, or a mix of those with some offtake as well? So a lot of water to go under the bridge there. You need to make sure you select the right off-taker and not get into bed with someone too early because the banks really do push you for a whole heap of details going forward.
Great. And we'll talk more about your experience in your management and your decision making shortly. But one thing that really stands out is actually like your metallurgy. Simple heap leach, strong recoveries, and low CAPEX potential. For people who aren't technical, like me, why is that important? And like, how does it really set OD6 apart?
Yep. So I'm a metallurgist myself, so that's sort of my background and been my bread and butter for a number of years, along with obviously building projects.
Yep.
The metallurgy here is always critical throughout the whole any process in the world. So we're getting 75% recoveries of the two key elements being NDPR, so neodymium and praseodymium. That's where the bulk of the value comes from. And then what we've been able to do through the heap leach process. So we've looked at, so going back a step, we've looked at heap leach processes versus tank leach processes. Tank leach processes was our original thought process. The Brazilians went down that track pretty fast, and the CAPEX numbers from there have sort of blown out. So they've been about 600 million Australian dollars. So what we've then thought, how do we be cheaper, smarter, and quicker as well? And we've been looking at the heap leach process, which has then actually increased recoveries, but it's also looking to be a lot cheaper as well. So a peer of ours over in Uganda, IXR, they had capital costs of about 120 million US dollars. So there's obviously some reasonings behind why we've gone that way, but there's also a whole heap of technical reasons as well. High recovery, nanofiltration, which is going to sound out there, but it's what it is. It's a bit like desalination for water and producing water. But what we do is we recycle over 85% of the acid back into the heap leach, which lowers our operating costs quite significantly. So there's a couple of things there. And then what we then do is obviously go through to a final product. And the final product we're going to produce is a mixed rare earth carbonate. So that's all done at normal temperatures, normal pressures. It's just quite a simple process. It's not a high temperature, high pressure leach, which we're seeing around the place for a number of other companies as well.
Great. I mean, talking about like, the low CAPEX potential, when I was going through your slide deck, could you talk a little bit more about the location of the project, and like how are you positioned to capitalize on all of the existing infrastructure around you if we were to go to production?
Yep, so we're located in Western Australia, and then if you zoom in and go down to the south coast of Western Australia, there's a place called Esperance, beautiful beaches down there, but it's also a mixture of farming and mining down there. So Ravensthorpe nickel is near there, and you also have a number of iron ore shows going out through the port. So an existing port, large capacity, large ships, also sea containers, which is how we would ship out the product through, existing roads, and we're just over 100 k's from Esperance itself, mostly on sealed roads. So we don't need to do a lot of those other infrastructure things which other people have to look at.
Sure. And look, more for my information now. I mean, we're talking some significant numbers here, but what is the actual spot price right now for like for your product?
So the product's an interesting one because there's 15 or 16 different elements, but the spot price for NDPR, which is what most people look at, is about $75 a kilo at the moment.
Mhm.
And that was, if you go back 2 to 3 years ago, it was about $120 to $130 a kilo. It's come back down to about 50, and then it's obviously come back up over time with China putting some restrictions in there and obviously a large focus around the world. What's interesting is that the US government has also put a floor price in with Mountain Pass or MP Materials in the US, where they put in a floor price of $110 a kilo. So a lot of people are forecasting numbers anywhere between $100 and $150 a kilo going forward for that product, based obviously on demand, but on trying to bifurcate the market as well between China and the Western markets.
Excellent. So that means, obviously, with the geopolitical tensions around the world, the fact is, China being a major producer, if we're able to we've already signed the agreement with the US, you're going to be a major supplier.
Yes, that's right. So, I mean, the US is obviously looking at Australia being the mine sites for the general the finding of the material, but then where it then goes down to in terms of metallisation and everything else they're looking to do in America. So we're definitely a wanted commodity, and if you look at the forecast, we probably need another 10 or 12 mines to actually meet the forecast. So a few of them out of Australia would be very handy, obviously, for the Australian government and ourselves.
Thank you. Very promising information. Look, you've also highlighted how much upside remains with less than 10% of the basin drilled. I mean, how big could this really get as drilling continues?
Look, there's definitely billions of tons out there. So we've done a lot of work with CSIRO and also ANSTO as well, in terms of the discovery of the deposit. When we're doing the work, we did an airborne electromagnetic survey, which has highlighted where all the basins are. We've only touched, as we said, 10% or less than 10% of those basins and already got 680 million tonnes. So there's billions of tonnes out there, but really what we've been focusing on is where is the best area to start. We've got an area called Inside Centre. Inside Centre is a bit higher grade at about 1,600 parts per million trio. There's already 120 million tonnes in indicated resources there. And most people are looking at 5 million tonnes per annum in terms of processing rate. So that's sort of equivalent to about a 20-year mine life already just in that one little spot. So we can get billions of tonnes, but let's get the right 100 to 200 million tonnes and then make a mine out of it.
And when you said 100, $110, is it US dollars?
The US dollars, correct, yeah.
Excellent. Well, look, let's rest a splinter and let's go into copper. Your maiden drilling at Gulf Creek has confirmed high-grade results. What have you learned so far, and what's next for this project?
Yeah, so Gulf Creek was an add-on late last year to us. So what it is we looked at about 30 different projects and we narrowed it down to this one here. It was a historic mine itself, mined in between 1896 and 1912, so over 100 years ago. And there's only ever been 2 drill holes put into it since then. So the best place to find, obviously, an existing deposit is underneath, or a new mine is underneath an old deposit mine or next door to it. And what we've seen in that Gulf Creek area is our first set of drilling was we went straight under the old mine, confirmed that the mineralisation continues at depth. But what we've also done is a whole heap of magnetics work, which is we can see that there's repeat structures or what looks to be very similar magnetic signatures around the corner from the existing mine. So that's what we're about to drill as we speak, and we'll obviously see what those results say over the coming couple of months.
And you said there's only been 2 holes in the existing old mine. I guess, how many drill holes do we expect from you in the next coming six months to 12 months?
Well, it depends on discovery, but we've got approval for another 25 holes at the moment. So we've got 7 priority holes that we're putting in. And going back a step, this is a VMS system, so a volcanic massive sulfide system. So super high grade system. When they were mining it, it was between 2 and 12% copper. The last drill holes we put in were up to 4.6% copper, so we've proved that that's there. So for us, the excitement is how big can this be, and obviously get to a size that's a bit like DeGrussa was once upon a time. You've got to be able to find it. They found it on the last hole, and then that turned into a multi-billion-dollar company. So it's a little sleeper for us. It's an early stage project, but we're hoping it turns into a little mini DeGrussa.
Thank you. And now, look, you've talked about multiple targets and potential repeat structures just then. Could this become like a meaningful second leg for the business alongside rare earths? Because you said there's 2. Obviously, right now, splinter is your priority, and then how much priority will you place on Gulf Creek?
Yeah, so Gulf Creek's second priority at the moment, but obviously based on discovery, those things can change. I think there will often be a competition for capital, but I think if we have some really good hits out there and actually have a big discovery, I don't think the capital will be a problem. Investors will get behind both a rare earth project and a copper project. For us, we would obviously have to have a big drill out at Gulf Creek if there was significant findings out there. We're also looking to do downhole EM, so stick a probe down the hole effectively, and generally what you can do is you can see within 50 to 100 metres around that hole where massive sulfides might be, so that then makes it easier to target as well. So still a little bit early stage on how the exploration works and how big this could be, but equally we've obviously got to do the work and keep on going.
Look, obviously I looked at your balance sheet. You have a market cap at the moment of $13 million and you have $3 million in cash. How does that position you to obviously capitalize on both of these opportunities? Because it sounds like it's going to be quite capital intensive.
Yeah, so we just recently did a $3 million raise with GBA Capital, so that's set us up in good stead. When we did the raise, what we said is we're going to spend about $600,000 to $700,000 on the copper side of things. Just dip our toes in the water around those repeat structures and make sure we understand the geology and obviously see what's there. The main focus continues to be around the rare earth project at Splinter Rock. So at Splinter Rock at the moment, we've just completed a drilling program out there as well, but this was a metallurgical drill program. where we've got about 2.5 tons of core going to ANSTO, and then that's for scale up activity. So the bulk of the money that we're looking to spend will be based on, well, that's about a $1.5 million program with ANSTO, amongst other things and studies as well. So bulk of the money is focused on rare earths, but we can equally ramp up the copper project based on success as well.
Sure. And how much runway do you think this $3 million will give you?
Look, it gives us up to 12 months. If we've got more drill holes that we want to put in at Gulf Creek Copper, then obviously that would drain those funds a lot quicker. But I think based on success, be easy to raise a lot of capital for a high-grade copper mine out there. But equally, Splinter Rock takes a little bit longer time. So we've gone through that discovery phase. We know it's definitely there. The next steps are going through the studies, so scoping studies, pre-feasers, which you'd expect to be seeing sometime this year and next year for both of those.
Sure. And look, I obviously did some more research on the share registry. About 29% of the shares are actually owned by the founders and senior management team. Could you elaborate a little bit more about the story and how much skin actually your team have in the game?
Yeah, correct. So from a founding perspective, so the original story, going back on the story, was three geos have got this company that virtually goes and mines old Western Australian mines databases and looks for things that weren't sexy once upon a time, such as rare earths, and then obviously crunches all the numbers and finds where the best projects might be. And Splinter Rock came out as one of those. So that was the story behind that. They still all hold all of their shares that they've had since day one. And then I was brought on as part of the IPO process to list the company. I've run companies in the past, taken them from exploration through all the study phases into full bank financing and actually construction and commissioning as well. So I've got that construction development background, but also operations background as well. So I myself hold about 2 to 3% of the company as well, with incentives to obviously increase that over time as well.
Thank you. Now, look, we're seeing a lot of attention on critical minerals globally. We discussed this earlier, especially from the US and Europe. Like, I guess, just repeating the question, but how is OD6 positioned to take advantage of that momentum?
Yeah, so we've spent the last 12 months trying to get the metallurgy right, but what we've focused on is getting the product right. So a lot of people are producing products that aren't generally accepted in the market currently. So generally, you can produce a monazite concentrate if you're hard rock, and then it goes to a next stage to be cracked and leached, and then that produces a mixed rare earth carbonate, which then goes into an oxide, which then goes into a metal, and then onto a product. So we've in our process, we leach it without any of the cracking and leaching and all those things, hence the lower capital cost. But we produced a mixed rare earth carbonate, which is an accepted product around the world. And interesting enough, the product itself is a high grade and high purity product. So it's been our key focus to get sort of that high 50% total rare earth oxide in that product. And anything above 50% is really good. So we've done that, but we've also achieved low impurities as well. And one of the ones that it's been tripping over a lot of people is uranium and thorium in the product. Obviously, Malaysia and other places, Linus has had issues with it in the past. I know out of South America, there's also been problems coming out of some of those products as well. For us, we've been able to get that to less than 0.001% uranium and thorium, so virtually not there, which just puts us in really good stead for a high payability factor. But also that means we can sell into stricter areas around the world like France or Europe, into North America, and then obviously Asia as well.
So it sounds like branding, positioning, and the product in itself. A lot of us who are not, in mining actually forget that you actually have that is all still part of the story, right?
Correct. I mean, if you want to build a mine, the biggest thing is an offtake agreement. And to get an offtake agreement, you need a really good product. And then obviously you can work back from there. So we've got a good product that we've been able to produce. We've been able to do it through simple methods without having to heat things up and do nasty things to them. So it just positions us really well, which has been the focus.
And can you talk a bit more about your experience and like obviously your academic pedigree and what makes you the right person to be leading OD6 at this point in the journey?
Yeah, so originally a metallurgist, started in the goldfields in Western Australia at Sundswalia, which is one of the more famous gold mines in Western Australia. Got a lot of history through there, including a US president that went through that way. I've worked in diamonds, and then that was all in operations. And then I worked for a large company called Fleur, which is a big construction and operation, or not an operations, but a big construction company around the world that builds anything from mines to missile projectiles and world trade buildings, etc. So I've done multiple projects around the world, and more recently I've been in the junior sector. As you mentioned, Callium Lakes, that was one of the ones that I founded along with three other guys, and we took that through the whole process of exploration, discovery, all the way through to construction, operations, and funding it. So I've been able to fund projects. I know how the process works. There's a lot of tricks that most people don't know about and how to actually get the project through the whole system. But in the end, what we're doing is working from that, make sure we've got that product right, and then that's what really sets you up for success going forward.
Thank you, Brett. And now looking ahead in 12 to 24 months, I guess for our investors and our viewers and our members, like what are the key milestones and catalysts we should really be watching out for?
Yeah, so if we look at the Splinter Rock, so there's obviously two different projects there. So let's look at Splinter Rock. Splinter Rock being the main focus for us going forward at the moment. Splinter Rock itself will have a couple of studies coming out, so we'll be working through that study process, scoping studies, then into pre-feasibility studies, and then obviously onwards from that. One of our key activities at the moment with a product that we know is off-taker discussions and engagement throughout North America, Europe, and Asia. So look for those non-binding MOUs that people will look to obviously see that it validates the product. But we're also looking at government discussions and interaction as well, given that it's a political hot potato at the moment, rare earths. So we'll be able to continue to have a lot of those discussions and engaging with those governments there as well. The other one is we've just completed that drill program for metallurgical core. So there'll be a whole heap of results coming out about the scale up of that, what that means, and obviously the product that we're coming out with as well. So we're looking to refine that product and get a lot of good results out that we can mention out to the various off-takers going forward. And there'll be capital and operating costs and all the normal great things that come out with lots of numbers in terms of financials, etc. In terms of Gulf Creek, we've obviously got a drill program happening as we speak with 7 priority holes. That can be expanded to 25 priority holes based on success. But we'll do the first few holes, put in a downhole EM to then make sure we're targeting those holes in the right direction. And then based on success, we'll obviously have more drilling out there and hopefully a resource that might come out of that Gulf Creek copper mine area.
Thank you, Brett. Well, that's why we record all of these interviews. So in 6 months' time or 12 months, I'll keep you accountable.
That's good. That's what the investors and everyone needs to do. So we do things right here. We're technical guys, so we try not to spruik it up too much. But our focus is making sure everything's technically correct and we get through the process, rather than spruiking the wherefores of what might happen in the future.
Thank you. Well, thank you, Brett. I look forward to seeing you very soon.
Thanks for your time.